Thanks very much for joining us. Really fascinating session that we've got planned today, looking at investment and sustainability in cities. Delighted to be here in Glasgow for COP26. And we're going to have just a brief welcome now. We're cutting live to the Blue Zone for Kit England.
Thanks, Richard, and good morning, everyone, and welcome to our webinar on investment opportunities for urban sustainability. My name's Kit England, and I'm the Green Economy Manager for Glasgow, a newly created role designed to help drive the city's transformation to a just, net zero and climate resilient economy by 2030. I'm delighted to join you live from the Blue Zone of the SEC at COP, where for those people like me who've been involved in the previous rounds of negotiations, the discussions helpfully moved on from if we should act and what we should do to how do we make it happen. The next decade is crucial for climate action. Globally, emissions have to halve to give us a safe chance of limiting global heating to 1.5 degrees. And in a European context, those reductions have to be even greater to allow developing economies the headroom to peak and then rapidly drop their emissions. So at the same time, we must also build our resilience to the impacts of climate change that are already locked in and going to be with us for decades to come. In the UK context, the Committee on Climate Change highlights that much of that investment needs to come from private finance, but that cities in partnership with government will need to steer and direct that work to ensure that it's appropriate pace and scale and it reaches where it's needed and the people that need it the most. Glasgow's at the forefront of that transition. The city recently committed to align its financial flows in a way that are compatible with limiting emissions to 1.5 degrees and building resilience. And now we're piloting innovative new approaches to make that happen. Our green print from investment that you're going to hear about in a little bit is one such approach, but there are many others, and cities all over the world are experimenting on how to make that happen now. So I hope you'll find this webinar a really useful insight into how the investment landscape for urban sustainability is changing as part of that broader shift to a net zero climate resilient economy, and how Glasgow's at the forefront of some of that transition work as well. So thank you very much, and I hope you enjoy the rest of the event.
Thanks very much, Kit. Appreciate you taking time out of your busy schedule there in the Blue Zone. So we've got a really interesting session today, and we're going to start out just with a kind of brief presentation on some of the investment opportunities here in terms of the projects that are there from Glasgow, from Kevin Rush. So over to you, Kevin.
Thanks very much, Richard, and I'm delighted to have the chance to speak to you here today. My name's Kevin Rush. I'm the Director of Regional Economic Growth, the DREG, for the Glasgow City region. I'm delighted to have the chance to speak to you today, just to present some of the thinking that the city has had, very proud host city of COP26, but to set out some of the ways in which we are thinking about changes in our investment approach in the years to come. This obviously sets out some of the context for the way in which we're thinking about investment decisions, the global risks landscape, so understanding where our investment needs might come in the future. And you'll see there in the top right of the screen, when we look at both impact and likelihood, climate action failure is really the number one challenge that all cities face. Is not in any sense, as we've gathered from the last 2 weeks, unique to Glasgow, but there are real challenges that all cities face that mean that we need to change the way in which we invest. We have a traditional way of investing in real estate, in hotels, in office accommodation, in residential. We understand how that works. There's now a need to look at a completely new way of doing things, and that's what we've set out in the Green Print for Investment, which the city launched last month. Looking at this, and obviously that slide is so self-explanatory, I don't need to go into it in any detail, I hope you'll agree. But what this sets out is some of those risks that were set out. There's a sense that there's a real interdependency. Both the behaviours of economies around the world are the cause and potential solution to the climate challenges that we face. So what this does say, all joking aside, is that there is a clear sense that we can make a difference if we do things differently. And what we've set out in the Green Print, what you'll hear later on from Roddy, for example, in relation to the Climate Neutral Innovation District, is a new way of approaching investment opportunities. One of the things that we do know is that the current progress, and we've obviously heard a lot about this in the last few days, is not going fast enough. The announcements that we had at the start of COP26 around deforestation, around methane reduction, are really positive and will help to, in the recent parlance, flatten the curve somewhat, but we know that we're not going fast enough. So it's incumbent on all of us, even those of us in economic development, to think very differently about the way in which we do investment. So, why we consider that green investment was necessary is that for a city region like Glasgow, the costs are really pretty high. So the cost of moving to a net zero climate resilient economy, around £30 billion just for Glasgow. Work by the Core Cities Network estimates that for the biggest cities, the 10 biggest cities in the UK outside London, the costs are about £210 to £220 billion So huge level of investment required to get to net zero in terms of our aspiration. But what we do know is that these are much lower than the cost of the failure to act. So we would estimate just now about 2.5% of GVA in the city region by 2070 would be the negative impact. Now that's about 2 billion per annum at current figures. I'm assuming there'll be some inflation between now and 2070, so that'll be a substantially higher figure. So anyone can understand the return on investment is pretty significant if we can identify those investment opportunities. But what's crucial, I think, for us, and what has certainly come through in the COP negotiations so far, is the need for a twin-track investment. The public sector has a role and the private sector has a role. Neither of us can do this on our own. To put it in context, the Glasgow City Region City deal, which is the biggest in the country at the time, is £1.13 billion of investment over 20 years. We talk about that as a great scheme, and it is a great scheme, but 1.1 billion over 20 years would not go anywhere near what's required for net zero. So there's a need for the public and private sector to work in partnership in this. So all cities have a dual role. First of all, in providing adequate climate finance, so in terms of being a direct provider through things like our pension fund institutional investment, but also as aligning the wider financial flows of the city in line with the Paris Agreement, and that's what we're trying to do with the Green Print. This is about looking about how we can bring other investment opportunities in to support that. So, the City launched last month its Green Print for Investment, a wonderful document which sets out a series of connected projects, a programme of projects actually, which ranging from relatively small investment opportunities to much larger scale ones like a Glasgow Metro or an energy retrofit, which could be up to £15 billion required. And again, context is important here. We heard a lot at the start of COP26 about the deforestation agreement that was signed by many countries, hailed by President Biden, the Prime Minister and others. But even the investment for that was about £14 billion. We're looking for £15 billion for a metro. So there is a real challenge in terms of the scale of investment that's required here. But the projects that we have in the investment prospectus, and this can be found in the Invest Glasgow website, there are 11 projects in total, as I say, ranging from really large ones like Metro and an energy retrofit right down to smaller opportunities. You'll be able to find that online, but I'll just talk you through some of the kind of headline ones just now. So the Glasgow Metro is probably the biggest and most transformational project that we have within the investment prospectus. We anticipate this could cost up to £10 billion to fully invest in a metro. This would connect the entire southwest of the city, but actually potentially the wider city region. And it's not just a transport project, it's a regeneration one. There are huge parts of the city or the city region which aren't well connected. Even though we have the largest suburban rail network outside of London, there are still real challenges in connectivity across the wider region. And what we do know in terms of the city's 2030 aspirations is that making a shift away from private transport to public transport is absolutely fundamental to that. So the Glasgow Metro is one of the biggest projects that we have in the prospectus. The second really big one is the Glasgow City Region Home Energy Retrofit Programme, coming in at a mere £10 billion. The other issue I think that we wrestle with in Glasgow, but actually, and I think it's important to state this about the investment prospectus in the round, is that all cities and all city regions are facing these exact same issues. If we are going to meet the carbon challenges that we've set ourselves, inefficient housing stock is clearly a big challenge for us. A city like Glasgow has a lot of pre-1919 tenemental properties, and they're very energy inefficient. So changing that to reduce bills, etc., but also reduce emissions is hugely important for us, and as I say, a crucial issue for all of us. Why this is so attractive to us though is that there's other benefits. There are skills opportunities for our young people as we move to a post-pandemic economy that might well be different from the service-driven one that came before it. Supply chain opportunities that come from businesses moving into the retrofit space. Fuel poverty challenges as well. There are just now, when you start to hear about things like heat source pumps, etc., they're great in terms of energy efficiency, but massively expensive and unaffordable for the vast majority of our citizens. So something that joins all of that up is something that can have real benefits for the economy financially, as well as in terms of our emissions. The third one, just to highlight, just to demonstrate the different types of projects. Those of you who have been to the city for COP or been to the city before can't have failed to notice that we plonked a great big motorway right through the city centre. It's pretty handy in terms of getting from the east to the west, But it does mean that within the city centre itself there is a real sense of disconnectedness between the west end of the city and the city centre. So we have aspirations in here to build essentially a cap over the motorway at Charing Cross, turn that into a public park, which would improve green space within the city centre, but also really improve connectivity. Just to, there are people who live just the other side of the city centre who end up being further away than people on the south side because of the challenge of getting across the motorway. That one comes in at a mere 60 to 80 million, so that's one of the ones that we're very confident, I think, about moving quite quickly. And then I think the final thing, just to emphasise from the portfolio, just to demonstrate the different types of projects that we have, is a Clyde Climate Forest Initiative, £107 million project over the next 10 years, and it looks at planting 18 million trees within the Glasgow city region. A very ambitious target, but one that we believe that we can meet. Obviously, carbon offset is only one of the ways in which we can meet the challenges that we have. We are realistic about the level that it can achieve, but nonetheless a really ambitious one, I think, one in which Glasgow genuinely is leading the way. So very different types of projects there. We have one which might be about transport, one which is about housing, one which is about connectivity in the city centre, and then one which I guess is very pure in terms of its environmental credentials. So for the city, what's next? We've got this out there, we've been speaking to lots of people over the last couple of weeks, and we have some detailed negotiations starting in the weeks after COP, as you might expect. I think it's fair to say that Glasgow has never suffered from a lack of ambition. Our net zero carbon targets are probably the most ambitious in the UK. We've got a 2030 target to do so. We're looking for £30 billion of investment. This is not us hiding behind the couch and asking for a few bob here or there. And also we're the host to COP26, so there is a sense that Glasgow is keen to put itself out there. So ambition is never an issue for the city. We know though that our role in this is a wider stewarding role. We can't do this ourselves. The Glasgow City Council's entire budget is £2 billion a year. Even the Strathclyde Pension Fund, which, if the pension fund managers are watching this, they will kill me. Even if they divested all of their investment into the city region and its green infrastructure projects, would not come close to meeting this. So we need to play a role in partnership with the private sector. One of the things that we can do is increase the quality of sustainability in business cases. We heard from Mark Carney this week, and I have no reason to doubt Mark Carney, that there's a lot of money available, trillions and trillions of pounds available capital, but what we need to do is improve the business cases in order that, yes, there is a sustainability element to these, but we have to accept and understand that the private sector understandably will always expect a return on that investment. So there's a role for us to play in terms of making that case much more effectively. The other role that we have to play is remove the barriers for investors. So for people who want to come to Glasgow and invest, we make it as easy as we can. We don't be massively bureaucratic. We work in partnership to design these things ourselves. And I think that's the final point that I would make. Early engagement is really key. Co-design of these projects to make sure they offer genuine investment opportunities. President Biden said last week, and he got some criticism for it, but he said last week that the private sector needed to be at the table for this, because otherwise this would never deliver. And he's entirely right. I'm sure he's delighted that the wee bald guy from Glasgow City Council agrees with the president. But I think the point that he makes is really crucial, and I think we understand that now, and that's why the Green Print for Investment is a different way of Glasgow doing business. So looking forward to the discussion today, but thank you for the opportunity to speak to you.
Great, thanks very much, Kevin. Really interesting, and also you pointed out there as well that that's a challenge that is being faced by cities both across the UK and Europe, but also globally. But let's do a quick introduction of the panel. So let's start with you, Alisdair. Just a quick kind of 2 minutes on yourself and what you do.
Yeah, so I'm Alisdair Gunn. I'm the project director for the Glasgow City Innovation District, and the Innovation District is actually Scotland's first innovation district, and it's kind of here central into the city centre. It's a collaborative partnership programme, and very much kind of focusing on supporting both the kind of the development of the city centre, and also kind of supporting that that delivery and development of technology investment into a variety of sectors.
Great, thanks very much. Sophie.
Yeah, hi, so I'm Sophie and I've recently joined the Urban Land Institute to run their research and advisory services for Europe. We've got some really exciting projects going on at the moment, things such as decarbonising the industry, mapping ESG and impact investments, all things that are very relevant to the conversation today. And prior to that, I used to run the global research department at Savills, so looking at how global trends were influencing real estate.
Great, it'll be interesting to pick up on some of those as well, I think. Kevin, just a brief introduction of you, because you didn't mention it really in your presentation, so you and your role as well.
So I'm Kevin Rush, I'm the Director of Regional Economic Growth for the Glasgow City Region, so I've got responsibility for all of our inward investment, our capital infrastructure programme, our employment, business support, and also responsibility for delivery of the Glasgow City deal.
Great, thanks very much. Grant, and thank you also for hosting here at the CoStar offices.
Thank you, yeah, glad to be able to. So I'm Grant Lonsdale, I'm a Senior Analyst at CoStar, so my job essentially is to oversee the analytics output of CoStar in Scotland, and I do that through a variety of mediums. That might be writing reports, engaging with clients, talking to the industry, presenting, most recently recording videos. So for anyone that's listening in today who might not be familiar with CoStar, so we are a leading provider of commercial property information. We have a building level database which has we're tracking nearly 600,000 commercial properties, and along with that we track things to do, characteristics to do with the building, so BREEAM ratings, for example, something that's specific to today. So we're able to see the direction of travel in terms of rents, potentially values, and where the demand lies at the moment. So I'm hoping to be able to contribute some data to the discussion today.
Great, thanks very much. Roddy.
Hello, good morning. I'm Roddy Yarr from the University of Strathclyde, where I'm the Executive Lead for Sustainability. So my job is to develop and deliver our climate change and social responsibility strategy. I think we're going to talk about some of the projects that we're working on. It's a largely operational role across all of our operating assets in West Central Scotland, but also thinking about our global reach in terms of what our impacts are in the operations that we have overseas as well.
Great, thanks very much. Let's maybe start with you, Grant. Let's pick up a little bit first of all on the real estate side, and what we're seeing. Obviously the focus of COP today is on cities, regions, the built environment. So let's just start with the general investment picture. I mean, what are we seeing at the moment in terms of sustainability? Are you seeing a change? Have you seen a change over the past 12, 18 months? What's your sense of where the market is at the moment?
Well, absolutely. So I mean, it's always been there, but there's probably been it's fair to say there's been a renewed spotlight on ESG and just sustainable investing over the past 18 months, 2 years. And ESG and sustainability issues are now front and centre of what investors' strategies are, and we're seeing big institutions leading the way, like Legal & General, Aviva, sidelining large amounts of capital for sustainable investing on the property side, and that's also supported by the finance industry as well. Some big lenders committing green loans, green financing to projects, and that tends to be for buildings which can meet certain sustainability targets. So it's EPC A rated buildings, buildings which are running renewable energy, for instance, and there is examples here in Glasgow which I'm sure we'll talk about at some point.
Yeah, and is that being reflected, Sophie, as well, kind of obviously from your research, but also the ULI trends, for example? What are you seeing, I suppose, is that being reflected across Europe and across the world in terms of the city investment side?
Yeah, definitely. Huge interest in sustainable assets. I think one of the issues that investors do have is just getting access to them. In terms of the sort of the most popular asset classes that people want to invest in at the moment, there's a lot in terms of alternatives, logistics, residential. They all came up top in the survey that you referenced. But it is difficult to get access to those sort of prime core assets, and I think one of the things that the investment industry is sort of grappling with slightly is, traditionally they might have looked to development as a way of accessing those prime assets. Now that's actually quite hard to do if you're serious about your ESG credentials. Building new buildings takes up a lot more carbon, a lot more energy than sort of repurposing other ones. So that's the other trend that we're seeing come through at the moment.
And I think that repurposing is something that we'll definitely pick up, because I think
Yeah.
we're going to focus a little bit on innovation as well, and clean technology and how that's influencing things. Just maybe, and this is for anybody, but Grant and Sophie especially on this, and what's the key driver for that? I mean, is this occupier demand? Is it investor demand? Is it regulation? I mean, I know you'll say it's all of those. But I suppose, what are you seeing in the market at the moment?
Well, I'll start then. So yeah, I'm going to say it's all of them. So I mean, some of the, just to sort of touch on some data points, for instance, just to kind of underline this. In terms of over the past 18 months or so, one of the measures that we track is the net absorption of office space. And what we're seeing is positive net absorption in the best rated buildings, the most energy efficient buildings. And actually it's not, there's not been a loss of occupancy whatsoever over the last 18 months on the office side. And that sort of comes amid lots of stories of occupiers downsizing, closing offices, sort of overblown death of the office, if you will. But there hasn't been a massive drop in demand for these best in class buildings. However, the real weakness is in the less energy efficient buildings and the more secondary assets, and actually there has been negative demand for those and rising vacancy, which is in contrast to the picture for the better buildings.
Yeah. I completely agree with that, and I think the industry is very obsessed with talking about green premiums at the moment, and it's it's something that is incredibly hard to measure. And you say a green premium, you have to say, okay, well, which asset class, which location, what are you actually measuring to do it? And yes, when you look at office buildings, those with the highest ratings, the BREEAM outstanding, they are higher rents, but they're also the newest buildings, so it's very hard to separate those two factors. Same with residential. If you've got a higher EPC, there is evidence that they're sort of get a higher cost. But I completely agree. I think it's the brown discount or the risk of the stranded asset. When you have a building that occupiers aren't going to want, doesn't fit with the current regulation, there's a real risk of that completely sort of dropping in value and potentially overnight.
I just wanted to follow up on that point about the stranded asset, Richard. I think I talked about home energy retrofit as one of the big commercial property retrofit is one of the even bigger challenges I think that all cities will face, because you run the risk of, it's maybe different thinking about it in a city centre environment, but commercial properties around the city that no one wants to occupy anymore because of their energy efficiency leave us with quite a lot of challenges about potential vacant and derelict sites coming there. So those issues, I agree entirely, I think, with Grant about not seeing the drop off in demand that we thought that we might, but I worry that there might be a series of properties that suddenly are left, and generally where they find themselves in a city like Glasgow are in the more challenging parts of the city. So there's big issues for us there, I think, in terms of commercial retrofit as well.
And you wanted to come in on that?
Yeah, it's one of the things that we've been seeing in the district. Over the pandemic, I mean, we've had a series of companies coming into the city centre, and so that demand has been strong. But of course, those companies are going into the new properties that are that have got that kind of rating, and albeit that we may have seen some larger companies kind of downsizing their office space to some of the kind of smaller offices. That again, when it comes to kind of creating that kind of startup community, who want to innovate in that particular space. Again, it's that these are some of the kind of areas we're now kind of looking at. Is creating that supply of those new kind of rated kind of buildings, but it just kind of bringing back onto that kind of the existing stock. I mean, there's an opportunity there. So again, from an investment perspective, there's opportunity for investors to come in and retrofit some of these existing buildings. And again, in itself is when people are now starting to look at that new property build, should they now be starting to shift towards existing buildings? And that's again something which certainly in the district we're aware of, and also we've got quite a good stock of real estate ready for that investment.
But to Alisdair's point, I think at the university we get that retrofit piece, and we've done that successfully, putting two 1960s 70s buildings into one state-of-the-art learning and teaching facility, spending 60 million in that investment that basically retrofitted if anybody went to Strathclyde, to the Colville building and the architecture building, into the new building for students, to enhance the student experience, to enhance the learning ability, and to make good use of that existing space, saving 6,700 tonnes of carbon compared to a new build. So it can be done. You can repurpose. Buildings back in the 70s do have a good shell and core in many respects, and if you've got that fabric, you just need to repurpose it, and you're off and running again.
And Roddy, I suppose, how much is how important is, how much are we relying on innovation, I suppose, and that sort of clean technology side, and where are we with that at the moment? I mean, what's the, how far ahead? I mean, it's interesting that you're coming from that academic side, so you're seeing probably much further ahead than we are, for example, maybe in some of the real estate sides.
I think the buildings that we're building are a lot more highly serviced, which is great, but it's complex. So I think that the tech has moved to a stage where we perhaps overthink some of our buildings. So in actual fact, we're thankful for that. We've got more sensing, we've got much more ability to influence the health and well-being within our spaces, and we need to do that in the future. But to a certain degree, the tech has to also reflect that the buildings have to be operationally efficient. So we don't want to over-egg the pudding in many respects, but we do need much smarter systems, particularly around power, around the fabric and how the fabric responds to the internal occupancy, so that the spaces can be zoned better for better energy efficiency and also for air quality, a huge issue, as we all know, with the pandemic. So tech is always going to be there, and we need to harness that correctly, but not overemphasize the throwing more tech into buildings necessarily. That's what I would say.
And it might be interesting just to pick up on some of the challenges that people are seeing in terms of this investment into urban sustainability. I mean, Kevin, maybe is it to do with planning? Is it to do with what are the challenges, especially that you're seeing? Obviously, you mentioned there the issue of funding for that, and that obviously needs cooperation. But what are the main challenges, and I suppose how are you trying to solve those?
So I think financing is still the biggest challenge, because investors always want to see a return. So I think it's still quite immature, is maybe the word. I don't think we've quite been able to capture exactly how. And a lot of, I think, the types of projects, even the ones that we have in the green print, require public sector enabling infrastructure first of all. So the private sector bit will come later. So I think some of the challenge is still being able to articulate how is a big institutional investor, with a lot of patience, right? I mean, there's people are going to have real patient capital investment in this, but it's still articulating how they can make that return even over a 30, 40, 50 year timescale. And the challenge with a lot of that is it still requires the public sector to come in first. So we need to understand so for example in Roddy's innovation district, we would need to understand where the public sector investment can leverage that in. We've been quite successful in doing that in Glasgow. For example, the Barclays development on the other side of the river is Scotland's largest ever inward investment, and that was leveraged in after City Deal investment in public realm around there. So that's the model that we're looking for, but it's just on a much bigger scale. So I think where the challenges come is in de-risking the investment for investors. I do think there seems to be substantial capital swirling around, but you have to de-risk it for them. You have to be able to emphasise that there is a return on the investment there. Planning, I think, is an issue that everyone faces all the time, but I don't think it's any more of an issue in relation to this than in any other types of investment. So I do think it's still the articulation of return on investment is the biggest thing that we need to face.
I would just say that, looking at things from a real estate point of view, and where we do have a lot of investors wanting to sort of invest, particularly sort of in looking at individual buildings, one of the challenges that they have, finance is definitely an issue and all the things we've talked about, but sort of picking up on your point is actually being able to measure what their issues are. Yeah. So we've talked a lot about energy efficiency. That is one of the key things that's relatively easy to measure. But on this survey that we've just done pan-European, only 50% of the sort of real estate individuals that we spoke to were measuring even their climate operational emissions and measuring the reduction of that. That's only half, and so many people have set a target. Then you get to things like biodiversity, social value, impacting public realm, and it's just very difficult to measure. And if you're not able to measure it, how are you able to say that you're making improvements?
I mean, is that a problem, that measurement side? I mean, I think it's interesting. I mean, we should talk a little bit, I think, around that side of impact, biodiversity, because that's a much larger topic than just the sort of sustainability side as we would look at it, which is to do around, carbon neutrality. What's your sense of that, Alisdair?
Yeah, I mean, it kind of comes back also to the skill sets of of industry and the sector, and it's one of the things which here at COP, all kind of governments are kind of setting that that standard, that lead point. But that now also has to come into the boards of companies, into organisations who are supporting that, and that's where even just starting to drive that that thought process will then help to upskill people on that particular area. And here within the city, again, one of the other projects which the City of Glasgow is also the Clyde mission, and that's again utilising, looking at the value that the Clyde has got in actually supporting kind of green development. And part of that, we're also kind of looking at that those kind of climate and green skills, and that starting to kind of have that plan in place means that we can then start to bring the people up to speed on how do you do an audit of a building? Is it and linked into that, there's not one standard. Everybody has got their own slice of. I mean, even we're talking climate tech, clean tech, green tech. In some, we kind of got to start to kind of navigate towards a common kind of language such that people understand and can measure, and that then leads to impact and outcomes. And that again links into that kind of investment aspect.
And Roddy, I noticed when I was looking at the Climate Neutral Innovation District that there was a discussion there around a whole systems approach. It might be interesting because that obviously picks up on this topic, but it might be interesting just to explain what you mean by that, and I guess how that's helping to provide a solution.
Yeah, so the whole systems approach is as Sophie said, it's not just about energy. We have to think of the whole piece in a holistic way, but also in a way that's approachable for people and for businesses and organisations and investors. So, we could go into a lot of detail on this, but essentially what the whole systems approach looks at is what do we need in the city and how do we achieve that? So let's think about affordable, clean heat. Let's think about affordable, clean power. Adaptation to the changing climate. Our buildings need to be much more resilient to cope with intense rainfall and overheating. We do get that in Glasgow, be surprised. We also need to think about people being at the centre of that, the health and well-being, access to services in a city centre zone, and ultimately deliver that as a package of at least thought leadership and resource and skills building around that coherent vision. So the whole system approach is very much that's what we talk about, and you can apply that across all sorts of businesses. And businesses do that. They have that kind of monitor, check, review, repurpose business model. So why not do that for an innovation district and make it climate neutral? That's socially responsible. It should be socially just, and we can measure and monitor that because we've got at the university and within the businesses and organisations in the city, it's a powerhouse of intellectual property. We've all got great ideas. We just need to harness them in a coherent manner. So what we've tried to do is paint that vision within the innovation district and make it real for people so they can understand it, and then we can start to talk about how we deliver that.
And it'd be interesting to get your perspective on that. Kevin, is that also part of where you think moving forward that's going to create a successful, innovative, interesting city that means the human capital that everybody wants to attract either comes to or stays in Glasgow and makes it a more overall investable proposal?
Yeah, so I think that's a very good point. I think there's a need for city centres in particular are going to change. I mean, we know that, and what's happened in the last 18 months has only accelerated the trends that we saw. So I think there's a sense in which you need to demonstrate that you're a city that is innovative, that does address the issues of the times. Our leader likes to talk about Glasgow as becoming the city of the times on the issue of our times. So the sense that we understand that sustainability is now such a fundamental part of the way in which anyone does business, that people will want to come here. We've been given a great opportunity with the last 2 weeks. The eyes of the world are in Glasgow. I mean, you know, when Leonardo DiCaprio turns up, no one can even bother turning around because Barack Obama's over that direction. There's a sense, I think, that we've got a bit of first mover advantage in some of this, because I think every city that you speak to will talk about retrofit as a challenge. They will talk about they have innovation districts. But I think we do have some first mover advantage, and I think in being able to demonstrate that Glasgow is taking these issues seriously, is thinking about them in a joined up and coherent way. And as Alisdair says, with the River Clyde, actually, we've got probably the greatest untapped development opportunity in Western Europe at the River Clyde. So we've got really key assets to build upon. So I think there is something there about attraction of human capital, about that sense that Glasgow is a place that people will want to come, that we really need to make the most of these 2 weeks to demonstrate that.
So I would say that actually when you look across Europe, the places that are attracting the highest migration at the moment in terms of a proportion of existing population, of course, are those like livable cities, places like Amsterdam or Zurich or Vienna. They're not the big capital cities like London, Paris. They are what are considered the livable cities. That is the sort of success story coming out of this pandemic. There was obviously a lot of rhetoric around sort of future of the cities. I think everyone has agreed the city has a really important role in the future, but it's what they look like. And I also think, just picking up on Roddy's point, that it's not just about the sort of the impact that the city's having on the environment and getting to net zero and reducing. They've also there's got to be a real consideration paid to the physical impact of climate change, and you're seeing some really exciting and innovative ideas across Europe and across the world of things that they're doing if you've got excess rainfall, but making them sort of part of public realm. Like in Rotterdam, there's these water squares that are used as like basketball courts, if it's dry, or they fill up with water when it's wet, and there's some really interesting things coming through.
And Grant, do you think that the investors are aligned to that in terms of looking at what cities are doing, and particularly focusing on these areas about how forward-looking some of the cities are in terms of, I suppose, it being a sustainable investment for them, both in terms of sustainability in an ESG sense, but also sustainability in terms of resilience and longer-term income? Yeah,
I would say so. I mean, I've heard a lot of talk from clients and just sort of talking about wanting to future-proof their portfolios. So, I mean, and they're obviously looking at different elements. If it's development, we're seeing building features being built in, which obviously have sustainability and well-being features. I mean, drawing a couple of examples from Glasgow, or an example, the one that stands out is 177 Bodwell Street, which is just completing round about now, I think. That was it is developed by HFD. It's all electric. It'll get 100% of its energy from a local wind farm, which is 15 hours away. It's got a lot of 50 miles away. It's got a lot of electric vehicle charging stations, bike provision. So it's really putting and it's a net zero carbon building as well. So it's really putting the sustainability at the heart of that, and looking at our data and the amount of time that it's taken for that building to fill up and the amount of interest that's been in it, it's been huge. There's been several noteworthy lettings. Virgin Money is basing its headquarters there. It signed a pre-let a few years ago. I think it's probably, if it's not fully let, it probably will be very soon. So that's how developers are going about future-proofing their portfolios. And then in terms of buyers for standing assets, they're looking at buildings which are going to align with certain targets and regulations. So you've got EPC. The government wants all buildings to have an EPC B or above by 2030. I've seen some research by Savills recently which quantified the amount of buildings that fall below that energy standard. And I think, just sort of going back to what Sophie said about access to opportunities being difficult, there probably is an element of that, and there's a lot of competition for these best-in-class, highly sustainable buildings that are going to deliver returns, and that's through higher rents, higher occupancy levels, and just the price premium that these sorts of buildings might attract. And
it would be interesting just to get a sense as well of the, I suppose, in terms of the collaboration side, how important is that for investors as well, that there's a a real collaboration with the cities, and that those cities have a long-term plan as opposed to, okay, there's an election coming up in 6 months' time or whatever. I mean, is that critical, do you think, from your perspective, from the investment side, Sophie?
Yeah, I mean, I think it's something that investors are looking at. It definitely, and just picking up on what I was saying before on the physical side of things, we're actually seeing more and more investors, when they're looking globally, pick cities based on sort of where they think the climate risk to the city or the physical risk to a city is now becoming a factor that they're actually putting serious consideration into. You do not want to be investing somewhere that's going to be flooded or underwater, and it's so that's definitely something that they're looking at. So they're looking at the cities to have a plan in place and be addressing that, as well as also their own sort of net zero targets.
Okay, good. I wanted to pick up a little bit on the retrofitting side as well. Kind of how much we're relying on innovation yet to come for that, and where do we see that? Because it's interesting you mentioned there, Sophie, as well, about the opportunity maybe as well to retrofit and bring some of the, because obviously the majority of buildings are standing stock, not shiny new buildings, and you do have the issue with embedded carbon with new ones. So how much are we relying on innovation there? Alisdair or Roddy?
Well, we are relying on innovation. I think the climate neutral innovation district, the buildings need to be retrofitted in various ways to be more efficient in terms of the energy that they consume, but also their resilience, as I mentioned before. So that requires a retrofit. The rainwater goods, the spoutings and the gutterings can't cope with the intense rainfall. That affects the fabric of the building, that affects the longevity of the building. So there's a retrofit piece there. What is the change? To Sophie's point earlier, we need to measure the existing baseline and then monitor the change as we deliver it, so the investors and the occupants know they're getting a return on that sound investment. So on the built environment, innovation is really important in terms of the air quality within the buildings. But I think I would say innovation is about having a vision that is deliverable but is also innovative, and I think that affects the urban realm. And for instance, the Avenues project, the City Deal funded Avenues project, the innovation piece that we see there is that we insert district heating within that. We insert an upgraded power supply that's clean for the city. We upgrade the adaptation solutions that are in that space that you won't see necessarily because it could be below the ground. The urban realm above it has to be more nature-based, more green walls and green roofs. Those are, for us, those are quite innovative, although they're existing technologies. But I think what goes around that is the sensing, the monitoring in the city. So smart buildings, smart streets, the ability to monitor traffic and people movements and flows, and adjust the urban realm to meet the demand that's there. All of which builds into a livable neighbourhood and a smart city streetscape that actually behind it has a lot of digital. So you need to think about the digital connectivity in that space. People want more access to digital services. So I guess the innovation is around that climate corridor concept, where we start to build in these climate and digital services. So that's the sort of innovation I think about when I think about what we're doing in the innovation district.
And there's been a lot of discussion around, we've done sessions on prop tech and fintech, for example, but nothing so far on clean tech, which could be that we're slightly behind the market on that. But it'd be interesting just, what's the definition of that, or is it slightly undefined at the moment, or where are we with that? Because there's obviously a lot of venture capital coming into prop tech and fintech. Is clean tech slightly behind at the moment?
It's a good question actually, because I think it comes back to that. You've talked clean tech, climate tech, green tech. I mean, there's got many flavours. One example I think we saw this week was, again within the district, we had obviously the first kind of clean tech investment conference, and that was 1,300 people at that. I think that again it depends on what particular area that you're focusing on. So for instance, there's been a strong kind of focus on renewables. So there's again within this kind of Scotland, we've got a very strong kind of renewables kind of sector. But now what's kind of happening is it's now starting to kind of evolve back down to some of those I would say kind of smaller energy and a kind of innovation, and that kind of links back into into kind of property tech, and I think that's something where what we've noticed is, I mean, certainly in Scotland, we've had a lot of angel and VC investors, right? So again, there's different kind of market sizes of investment, right? So there's large investment when it comes to kind of it's the urban realm or infrastructure, but again, when it comes to some of those innovative technologies, for instance, charging stations and things like that, we're still to start to see that angel community move into that I would say the kind of clean tech space. So that's an opportunity. But again, the thing is that I would say that it's starting to evolve. So it's got time to kind of move forward. But that again within the city and within the district, we are seeing that coming through. I mean, we've got quite a few companies, like Catrick Technologies, are kind of looking at that kind of kind of wind turbine kind of renewable. So it's starting, but it's at the early stage in looking at smaller businesses. I think we've still got a lot of catching up on that.
And it's quite cash intensive. So is that something that's at the moment being funded mainly by the public purse, by governments or cities, or?
So one of the things which the Scottish Government is in their programme for government, again this year they've kind of announced that kind of investment. So there's again, it's not just dare say it, kind of capital, it's also skills, and I think that's something which we've got that in place, and that's a real positive aspect kind of coming forward. So yeah, we're I think with Mark Carney announcing, I think that that investment, but also the banks. So one of the things which there are NatWest kind of highlighted as well, you're now starting to see a prioritising of that investment into kind of clean tech technologies. So where some companies may not be necessarily directly in the sector, I think any innovation now has to have sustainability at its centre in its development, and that will then help to move that investment.
I think a good example that we've had at COP is the vertical farm, which is at the Glasgow landing zone in O'Calpine Street, which I visited with IGS. That in a 50 square metre space, and I think was it 9 metres high?
Yeah.
A hectare of growing capacity in a dense urban area, with LEDs, so clean electricity with LEDs, growing, intensive clean food for cities. Totally applicable across any dense urban form, rural, semi-rural, suburban, wherever. I think that's, and with robotics built into it, robots servicing the trays that come off the line. That's right there. It's just over there. We can go and see it. That's a great example, I think.
And just on that, I mean, the investment they secured, 42 million into that technology. In Scotland, that's one of the highest investments into clean tech kind of product in the public sector. Scottish Government, again, we're involved with that.
Yeah.
I will put that on my list for this afternoon. It would be good just to pick up. There's around 10 minutes to go, by the way. So if you've got any questions, do put those into the feed, and we'll try and address those in the last 10 minutes. I wanted to pick up. There's obviously been a lot of discussions at COP around social impact, social justice. And it would be interesting to see how you think, and this is open to anybody, how you think this can be achieved in the context of cities, especially who plays a role there. Is that the community at large? Is it the cities? How do we create that kind of social justice, especially that idea of a kind of just transition as well?
So I think it sounds like the biggest cop-out answer, that everyone's got a role to play in this, but it's true. I mean, I think historically sustainability was seen as a kind of post-materialist thing that people could afford to be sustainable. I think that there's a role for government to play in terms of that just transition. Even I think in terms of entry-level skills jobs, what we know is that, you know, the biggest impact that we had in the city, and all other cities would have had, was that the kind of jobs that young people tended to go into have been disproportionately impacted by the last year. So those entry-level jobs in things like the retail sector, hospitality are not there anymore. So we are developing a Just Transition Skills Plan, which will look at what we think the opportunities for the future might be. And I know I keep going back to energy retrofit, but that is going to provide a lot of those job opportunities. So I think mixing up your skills planning with sustainability issues, I think, will help in that. But I think there's a big communication part as well. I mean, one of the criticism of COP, I think, has been that there's still a lot of voices who feel excluded from the discussions and the negotiations. So for us in Glasgow, we need to make sure that the people who live in the more deprived parts of the community both feel it's their responsibility and that they can benefit from this move. And that's why I talk about things like heat source pumps is almost fanciful just now, I think, for people, because to your average person living in the UK, spending 20 grand, even if you get a grant of 6,000-7,000 on a heat source pump is never going to happen. So there's something about making that change affordable. There's something about demonstrating to people that there's job opportunities, there's career development opportunities for you, and that we're all part of the same thing. There's something about showing that we're all part of the one society that we need to get to quite quickly, because I think if it's still seen in the old, it's nice to be green because you've got money, that's never going to make the change that we all need, I think.
And there's a lot of focus, certainly from the pension funds, in terms of purpose-driven investment,
yep,
social impact, creating social impact. Be interesting, Grant, Sophie, just to see, you know, it's been very noticeable that a lot of the investment managers have all hired global heads of ESG, European heads of ESG, and impact in many cases. So is this the kind of thing that we think is going to start making its way through also in terms of investment, that there's going to be that focus as well from the investment managers who are traditionally investing in real estate, will be taking a view on the types of real estate, the types of initiatives that they're putting in?
I don't know if you want to take this one, Sophie. You might.
Yeah, I mean, I think it's definitely something that is happening. People are really looking at place, and they're not just sort of looking at individual, building an individual building. They're looking at what impacts that building can have on the community. Community engagement is really important. A lot of the most successful developments, particularly when you look at larger developments, are where they've got the community engaged at a really early stage. There's lots of really good examples about sort of competitions and things to get people really excited about the opportunity of having new buildings, new opportunities, sort of exciting new things happening in their area. Again, as I say, there is that sort of I keep mentioning development, and actually that's not necessarily the focus at the moment. But and we've talked a lot about fitting buildings, but I think what we're also seeing is a lot of repurposing going on. So there's a lot of redundant retail space, particularly if you look at markets like the UK and the US, and we're beginning to see it more in markets like Germany and Spain, as that sort of online sales increase. So converting things from retail, you've got these not necessarily easy buildings to convert into other uses, but at the same time, we have an undersupply of housing. So we've got to make sure that what's being built and what's being repurposed is to the right stock that we need. We have an oversupply of retail, we have an undersupply of housing, just to use two basic examples, and there's an obvious change there, but it's really not that simple at the moment. It's very difficult to do, and I think that's an area that a lot of investors are looking at as well.
I think just on the social impact point, I think it has to be made clear that it's meaningful and not just lip service, and I don't actually mean that's always the case for investors. In truth, I think sometimes, going back to Sophie's point earlier on, there needs to be work done to define actually what is the benefit that you can bring to a community. I mean, we had an example of a project of over £100 million, and the social impact that was associated with it was a series of school visits from the company to go and support people into careers. The level of school visits that they had put, the schools couldn't accommodate them, so they didn't want them. So therefore there was no joined up in terms of, there was nothing joined up in terms of the policy drivers from the city. The investors themselves would have taken a different approach if we had asked them to do that. So I think it's great that people are employing professionals within their organisations to do this, but I think it goes back to that point earlier on about a need for early engagement between cities, investors and the companies to say, okay, if you are going to do some social impact, or you are going to look at how we can spread the environmental benefits of what you're doing, this is what we want that to look like, and this is what you can deliver.
Yeah, I think the social piece is so important because it's about people, isn't it? And it's, it is about people coming with. I'm not going to say that. I was going to say people coming with us on the journey. It just sounds so awful.
I mean, the X Factor's not on anymore, Roddy.
I do apologise, but this is about people. Climate justice is social justice, and they're inextricably linked. It's about like mitigation and adaptation. We can't do them separately. It all has to be part of that whole systems approach. I mean, for what I think about it is it's affordable heat, and that's about the fabric of people's homes, having a roof over your head that's warm, secure, safe. You can get access to the services you need, be that health, be that jobs, be that green space or leisure, within a reasonable time frame at a cost that is affordable. You can bring your children up if you have them safely. You can walk about without being mown down by a car, because the streets are made for cars and not for people. Which sounds trite, but that's the reality. If you go out onto the streets now, it's car centric, it's vehicle centric. That has to change. We have to have more active travel so people, can get from A to B safely, securely, and efficiently. And I think in the changing climate, we've got to really respond to how our streetscape and our environment responds to flooding. If that means you can't get to work, that affects your ability to be socially upward, if you like, and socially mobile, and that's important. So I think it's that whole systems approach again. I would say that because that's what we think.
Thank you. We've only got around 2 minutes left, so it'd be interesting just to get kind of a final kind of 20-30 seconds from each of you on, I suppose, do you see COP26 as a success, I suppose, from the way you're looking at it, and certainly as a key point for investing in sustainability in cities, and I guess also what's your hope for the outcome or any opportunities that you see coming from it? 20 seconds to you, Roddy.
Yeah, I'm inspired by COP. I know I'm not in a negotiation position, but I see the vision that the university's brought forward in collaboration with the city and with the region and with private and public stakeholders. We're talking to each other, we've got the ideas, we've got the tech, we've got the ability. I think the financial piece will come, and I think that's hugely exciting, and I think we can make a difference to the people and citizens of Glasgow and the region. So yeah, I'm hugely excited about it.
Great, Grant.
Yeah, I do think it's a key moment. I mean, it's just catalysed a lot of things. We've talked about certain industries being slow to adapt, but we are starting to see examples of finance and green finance, green leases being signed in the property industry, investors, tenants coming together and sort of having a joined up discussion about what they want from their buildings and their space and all of that. So it is a key moment. It's just driven forward the sustainability agenda, the ESG agenda that was already there. So it's been a great thing, yeah.
Great. Kevin?
Delighted and similar to Roddy, hugely excited I think by what's happened. I think two things for me very quickly. One being there I think has demonstrated that Glasgow can hold any event of any size. I mean, it's the biggest thing the UK has hosted out with the Olympics really this millennium, which sounds quite hyperbolic, I'll grant you. I think the second thing is that you can see a real appetite for people to do this. I think we're getting really strong in environmental credentials, we're getting very strong in the economy. I think what we've started to see is those two sides fitting together, so I think the future is very bright.
Great. Sophie?
Yeah, agree, so won't repeat what's been said, but I think from my point of view, the more we talk about this the better, and COP26 has really put it on the agenda of sort of every newspaper, every country, everyone, it feels like, is talking about this now. So that's brilliant, and hopefully all good things will come from this.
Great. Last word, Alisdair.
Last word. I think it has been an opportunity for the youth, our next generation, and it's been really great to see even the activism into that, the activity. I think that's a vibrancy that that has been brought to. I mean, and again, it's great to have the world connected together, and that's the one thing that COP has done and Glasgow has achieved, is brought everybody together, and that's a legacy for the future.
Great, thanks very much. Really interesting discussion. Thanks very much to everybody for joining us on the live stream. This will be available on demand, and we'll also be able to share with you the presentation slides as well from Kevin. The next sessions that we'll be running will be focused on CEE, then European debt, And then we've got also a focus on infrastructure, particularly looking at transportation, which is interesting in light of the mobility discussions as well here. Thanks very much for joining us, and look forward to seeing you at the next event. Thank you.